I'm really excited about what's about to happen in the digital asset space because of supply and demand. Yeah. Right? We got the Bitcoin ETF, which is going to be approved. BlackRock's going to get approved. That approval is going to unlock $30 trillion of assets in financial advisors who are not allowed to buy digital assets. And if their clients say, I want 10 basis points, that's 30 billion. If they say, I want 100 basis points, 1%, which is not even a lot, that's 300 billion. Bitcoin trades about 100 billion on average. About 600 billion is mostly hodled. So if 300 billion comes in on 100 billion of free float, that's a big move.
The 2024 crypto market bull run has everything. A halving event, spot Bitcoin exchange traded fund approval, institutional adoption, and even possibly a much-awaited Fed pivot. Renowned hedge fund manager and founder of Morgan Creek Capital Investments, Mark Yusko, is certain that the U.S. Securities and Exchange Commission will approve the BlackRock Bitcoin ETF application. Yusko is betting that BlackRock's application will, in fact, be the only application to be approved by the commission in January. According to the Morgan Creek Capital founder and managing partner, the SEC will use the same tactics they use for the gold ETFs by giving large players like BlackRock a little edge over others. Whether the commission is going to approve one or multiple applications remains to be seen. However, it is already very clear how much of an impact that announcement will have on crypto asset prices. At the moment, Bitcoin is trading at over $37,000 per coin, a 124% increase year to date. The largest altcoin is also above $2,000, while crypto assets like Solana and Avalanche have had 3-digit percent increases this year, a lot of it over the past month. According to Mark Yusko, the approval of BlackRock's application will help unlock tens of trillions of investment dollars that currently cannot enter the cryptocurrency market. Yusko adds that if BlackRock's extremely wealthy, well-informed, and influential clients add only 1% of their portfolio to Bitcoin, hundreds of billions of dollars will come into the crypto industry, which will definitely move prices. But 2024's significance goes beyond the ETF approval. It is also a halving year, an event which typically precedes huge upside rallies in Bitcoin and other crypto assets. Yusko describes the halving as destiny, one that would see Bitcoin's price double, even in the worst-case scenario. When he adds the ETF approval and other developments, Yusko is predicting a 440% increase in Bitcoin's price, from the current $37,000 to around $200,000 between June 2024 and June 2025. We will now bring you clips from Mark Yusko's latest interview with Thinking Crypto. Please watch, share, and like this video. Also, ensure you subscribe to the channel, turn on post notifications, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Ultimately, the halving cycle is destiny, right? When the halving cycle occurs, and the halving occurs next April, the block rewards get cut in half for Bitcoin, and the price of Bitcoin basically has to double. Right. So, well, why does it have to double? Well, if it didn't, then the miners would all go out of business. And we can't have the miners all go out of business. So it's kind of a built-in mechanism for increasing the price. Well, why does that matter? Well, an increasing price attracts activity, attracts notice. And so the more money that gets converted from fiat into Bitcoin, then some of it trickles down to the other parts of the ecosystem. And it's, rising tide lifts all boats. Yep. So a fair value of BTC today, somewhere in the low 50s, according to the, Tim Peterson model, based on Metcalfe's law, which I think is the best model out there. Let's round it to 50 to be conservative. That doubles to 100 in April, May next year. We shoot right through fair value in these, crypto falls. That we're in crypto summer now till next June. Then we go to crypto fall from June to June following the halving. Then we go to another crypto winter, but that's a long time from now. But in crypto fall, on average, we've rallied about 2.5 times fair value. I don't think that happens this time. I think partly the law of large numbers, partly not as much leverage in the system. So, do we get 1.5, 1.75, 150, 175, maybe we could get to 200K. I'm going to take the 150 number. Seems like a a logical place for us to be sometime in 2024. Technology is evolving, and digital technology is here to stay, and blockchains replace trust with truth. Truth is better than trust. And the banking industry has relied on trust for 800 years. They've had a good run. It's coming to an end. It won't end tomorrow, but ultimately, we can all be our own bank. We can own our own assets. We can own our own identity, our sovereignty. And we can actually, look, the key word in the white paper is peer-to-peer, right? Hyphenated. Or 3 words, if you want to call it 3 words, or 2 words, peer-to-peer. But the reality is that's the key. What does that mean? It just means that I can send you value without an intermediary.
Right.
Right now, you have to have a bank account. I have to have a bank account. I send you a wire or a Venmo or something. And that's the funny thing about fintech. There's no tech, right? It's just a UI UX. And it's not a web transaction, because I send it to you electronically using an app, but that's web too, Mark. Well, yeah, but then it leaves the web and goes into the banking system.
Yep.
That is not native. That is not digital. So what's going to happen in Web3 is we're going to have native currencies, Bitcoin and others, that will never leave the web. That transaction that you and I do will stay resident. Or I'll be in my car being driven, because we won't drive, and it'll pull into the charging station. I won't get out of the car and put a card in a slot and have it call, literally use a phone line or an internet line to call a bank and approve the charge.
Right.
That will not happen. The car will access a wallet and pay the machine. That will all happen on chain, on the web.
Instant.
And that Web3 ecosystem.
Institutional cryptocurrency adoption has been a hot issue in the cryptocurrency industry for many years. When Michael Saylor's MicroStrategy started accumulating Bitcoin in 2020, everyone thought it would finally open the floodgates to mainstream crypto adoption. But that didn't happen. We thought the same thing in 2022, especially with the metaverse craze in early 2022. And that probably would have opened the floodgate if not for the Terra Luna collapse and the subsequent contagion that took down many crypto-related firms and painted the overall digital assets industry in a very bad light. Yusko says all of that will change in 2024. Not only are wealthy institutional investors coming aboard in 2024 after the approval, but Yusko also believes January 1st will usher in the beginning of widespread mainstream adoption for cryptocurrencies and other digital assets. According to the renowned hedge fund manager, we are about to enter the era of complete tokenization of real-world assets. Everything from investments to medical records and advertising will exist on the blockchain and be owned by individuals, not greedy corporations that sell data to the highest bidder. Here are more clips from the interview.
2024 is the big year. And look, I've been talking about this for 6 years. It's crazy. I've been talking about this for 6 years, that 54 was the mainframe, 68 was the microchip, 82 was the personal computer, 96 was the internet, 2010 was the mobile net, and 2024 was going to be this thing, the truth net. And what's the truth net? The truth net is the internet of blockchains, where the blockchains defined this spatial web and everything settles to chains. That we don't use centralized databases. We don't use centralized companies, where we don't have cookies tracking our information. We own our information. We don't use financial services companies that are outside the web to transact. We transact peer-to-peer using native digital assets. And 2024 was the beginning of that 14-year trend. So we're just beginning, right? We haven't even started the game. The national anthem's been played. The players have lined up. They're about to blow, the whistle here in January 1st. And then we start the game. And it's going to be a glorious game. Now, the next 4 years, like 54 to 58, like 68 to 72, like 96 or 82 to 86, like 96 to 00, like 14 to 18, 10 to 14, They were all amazing.
Mm-hmm.
But then what followed every one? A crash.
Yeah.
Every time. Because we got super ebullient, valuations got too high, and then we had a crash. But what came off the other side of the crash? Remember in 2000, 2001, 2002, massive crash, end of technology. The internet's done. Pets.com is a failure. Web band's a failure. You ever heard of Amazon or Chewy? Those are pretty successful companies.
Yeah.
Uber, pretty successful company. Apple, pretty successful company. They all emerged post the crash. So we'll go, 2024 to 2028, and we'll have this incredible period. We'll build a bunch of companies, and then we'll have a bust. And we'll have a crash, and people will say, I told you it would never work. It's dumb, stupid, too slow, and then we'll build on the other side the real infrastructure to make it invisible. We use the technology for its intended purpose. We don't think about the technology.
Yeah.
We don't think about what a blockchain is or does and how it's different than a two-dimensional Web 2 solution. What we'll realize is, hey, I want to use my medical records for my own benefit, not for their benefit to sell my data to Merck to monetize. I get the advertising revenue to me. I say Pepsi could advertise to the day I die. I'm never going to drink a Pepsi because I don't like the taste of it. Yeah. Coke doesn't need to advertise to me because I'm going to drink Coke if I drink anything. So why don't they pay me directly? They don't need to advertise on television to have me buy a Coke. Just send me money and I'll buy Coke. So all of this kind of data flow is going to happen, but it'll be invisible to us. Right? You'll walk by your favorite store and you'll get a message saying, hey, we picked out that stuff you were looking at last night. It's all boxed up and ready. Come on, 20% off. Yeah, that works for me. So that will happen, but we won't talk about it. It will just happen. Exactly. And it'll be as transparent as all the technology we use today that didn't exist. Right? We all have uttered these words. How did our parents survive without a phone?
Right.
They actually survived quite well. They had very nice lives. And my dad still doesn't have an ATM card, literally. Because he's like, I just go to the bank and get the money. Like, why would you do that? Why would you walk in a building and ask a person for money and just use a card? And in the future, you won't do that. You'll punch a button on your phone, and actually probably won't even be a phone. It'll probably be a hardware security module. It'll be a hard wallet that you carry around with you, and the phone will go the way of the dodo bird.
Meanwhile, the SEC is charging forward with its assault on the cryptocurrency industry. On Monday, the commission announced it is suing the corporations that operate the cryptocurrency exchange Kraken for operating Kraken's crypto trading platform as an unregistered securities exchange, broker, dealer, and clearing agency. Earlier this year, the commission used similar words in a lawsuit filed against Coinbase, which the SEC also tagged as an unregistered securities exchange, broker, dealer, and clearing agency. However, the commission is also accusing Kraken of questionable business practices, including the commingling of customer funds. Kraken's business practices, efficient internal controls, and inadequate record-keeping present a range of additional risks that would also be prohibited for any properly registered securities intermediary, the SEC noted in its filing. For example, it continued, Kraken has at times held customer crypto assets valued at more than $33 billion, but has commingled these crypto assets with its own, creating what its independent auditor had identified in its audit plan as a significant risk of loss to its customers. The regulatory agency is also accusing Kraken of at times paying operational expenses directly from bank accounts that hold customer cash. On the issue of listing securities, the SEC listed crypto assets including Cardano, Axie Infinity, Polygon, Algorand, Filecoin, Dash, and Solana. Bloomberg News also reported on Monday that the Department of Justice is seeking more than $4 billion from Binance Holdings as part of a proposed resolution of the years-long investigation into the exchange's activities. The report further notes that negotiations between the Justice Department and the exchange would include the possibility of Binance founder Changpeng Zhao facing criminal charges in the United States. The charges against Binance and Zhao include alleged money laundering, bank fraud, and sanctions violations. Zhao himself has confirmed the situation via a post on X, also announcing he is stepping down as chief executive officer of the world's largest crypto exchange. His post reads, "Today, I stepped down as CEO of Binance. Admittedly, it was not easy to let go emotionally. But I know it is the right thing to do. I made mistakes and I must take responsibility. This is best for our community, for Binance, and for myself. According to Zhao Post, Richard Tang, Binance's former global head of regional markets, is the firm's new chief executive officer. Before concluding the post, Zhao also took time to assure the public about Binance business practices in light of the charges against the exchange. I am proud to point out that in our resolutions with the U.S. agencies, they do not allege that Binance misappropriated any user funds and do not allege that Binance engaged in any market manipulation, the Chinese-Canadian business executive stated in his post. Funds are safe. What are your thoughts on the latest rounds of regulatory crackdown on the cryptocurrency industry? Do you think this affects the spot Bitcoin ETF approval? Please drop your replies as well as your comments on Mark Yusko's predictions and outlook in the comments section below. Finally, don't forget to like this video, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching.